Welcome to Pro Data Traders, your trusted source for cutting-edge stock market analysis. I'm your host, bringing you the latest market news like a seasoned newsreader. Today, we're diving deep into INOX India Limited, the cryogenic powerhouse that's turning heads with its Q1 FY26 earnings. If you're invested in INOX India or just scouting for high-growth stocks, stick around. We've got revenue surges, massive orders, management secrets from the earnings call, and technical signals that could signal a breakout. Let's get into it. First off, a quick overview of INOX India. This company is a global leader in cryogenic equipment, with over 30 years in designing, manufacturing, and installing solutions for industrial gases, LNG, and cryo-scientific applications. Serving 100-plus countries, with facilities in India, Brazil, and the Netherlands, INOX is made in India, made for the world. Key divisions: industrial gases, 48% revenue, LNG, 29%, and cryo-scientific, 19%. Promoters hold 75%, with strong ROCE at 34% and ROA at 26% in FY25. Listed since DES 2023, it's debt-free with $275 cash, a solid foundation. Now, the star of the show, Q1 FY26 financials, announced August 4th, 2025. Total income hit 352 mil, up 16.7% YoY from 302 CR. Revenue from operations, 340 CR, a 14.6% jump. EBITDA climbed 19.4% to 89 CR, with margins expanding to 25.1%. That's 60 BPS better. P8 surged 18.9% to 61 CR, margins at 17.3%. Other income boosted by 136% to 12.7 CR, thanks to reversals and interest. Order inflows were stellar at 415 CR, up 34% YoY. Backlog breakdown: 45% industrial gases, 654 ARA, 32% LNG, 4560 4G, 33% cryoscientific, 334 CR. Exports at 63%, domestic 37%. This gives 1 to 1.5 years visibility. Impressive. But viewers, the real shocker? The LNG segment exploded 121% YoY to 102 CR. Driven by OEM supplies, regulatory tailwinds like LNG in mobile vessels, and Kalal plant scale-up. They're targeting 5,000 tanks annually short-term, up to 30,000, 40,000 in 3 to 5 years. Awards for LNG tanks and sustainability. That's leadership. Industrial gases, the biggest at 170 CR, 48% revenue, dipped 9.5% due to U.S. tariffs, but resilient with new orders in ultra-high purity ammonia, ISO containers. First in India, DNV certified, and CO2 battery storage, scalable alternative to lithium ion. Management says tariff impact limited, only on steel components, and few U.S. suppliers. Cryoscientific shown with 67 CRA revenue, up big, thanks to 145 critter cryostat thermal shield repair order, 90% in-house. Confident on FAIR, Germany, and ISRO tenders, space sector boom ahead. Shifting to the earnings call on August 5th, CEO Deepak Acharya and CFO Pavan Logar spilled the beans. On tariffs, limited hit on disposable cylinders, 10 to 12% revenue, new approvals for helium R32 add 5 to 6 lakh units. Kegs, Q1 orders 6.4 CR, up from 2 CR, Q2 28 CR from Germany. Targeting 100,000 kegs FY26, with audits from Asahi Carlsberg and Sepok. Anti-dumping duties on China help. LNG outlook. Winter fuel for 8-10 years. Many LNG terminals and pipeline. Indonesia, Philippines, Andaman. KPAX 80 TR for Canla, Kala Savli expansions. 5 to 6 GR for LNG tanks. Cryo 8 are happy. More orders likely. Fair bids competitive. ISRO third launchpad tender by year-end. 15 to 20% cryogenic share. INOX favored. Financials, guidance intact, 18 to 20% revenue growth, FY26, EBITDA higher. Savli plant ramp up to absorb costs, improve margins. Cash, 275 ER funds growth. On challenges, slower LNG stations, 45 operational versus 1,000 target, but OEM innovations, 9990L tanks, dual tanks for 2,000 kilometers range, and private fueling, Adani Ambani pumps, changed the game. No major tariff pain. Competition from China, but FY managed. Technicals as of August 22nd, 2025, stock at 1,152, up 0.04%. RSI daily 50. 48, neutral, weekly 51.97, neutral, balance, not overbought. ADX 26.25, trending market, watch for 30, bullish signal. MACD 20.64, negative short term, but rate of change plus 2.87 positive. Volatility low, ATR 36.61, Bollinger width 0.13. Beta 0.74, stable versus market. Outlook, bullish. 18 to 20% growth, LNG, hydrogen fusion drivers. Valued at 29x FY28 earnings, reasonable for 19% ACAGR. Risks, tariffs, execution delays, but diversified backlog mitigates. That's the wrap on INOX India, a stock with explosive potential. If you like this, smash that like button. Subscribe to Pro Data Traders for daily news style analyses, and comment, buy or sell INOX. This video is for educational purposes only and is not financial advice. Please do your own research before investing. We'll see you next time. Stay invested, stay informed.